Okay. Okay, let me take a record. Though this is the two structure that are being revealed, these two, this half of the year, January to now June. The structure number one in the market, trying to pray with this one. I do it in different way, in an uptrend and in downtrend. As we know that the price when moving up is moving with the series of high and high low, high and high low. And when it's moving down, the market moving with the series of lower low, lower high, lower low, lower high, lower low, lower high, lower low. So how do we know that it's about to change the trend? The matter is that, how do we know? How do we know the change of the trend? The change of the trend. The matter is that, how do we know that? The matter is that, how do we know that the price is about to change the trend? Maybe from an uptrend to a downtrend. How do we know? That's the matter. That how do we know that the price is about to change the trend from up to down trend? And how do we know that the price is about to change from downtrend to an uptrend? That's the math. We know that moving sees high and high low and stuff like that. So for those who follow my YouTube channel, they can meet with this video, explain about invalidation point and stuff like that. That to change the trend, the price moving this way. Sorry. That the price to change the trend, it's supposed to break the previous before the last year high up, then it break it below, the last year lower, high low. Then after this break, always we expected the price to retest at this point. We expect the price to retest at this point as an invalidation point. As an invalidation point. Okay. But in normal price action, we say that after the price did the break, the break of structure, we are expecting the price to retest at this point. This is in different ways because this is on the beginning of the what? Of the trend. And in another way, we call that this is a head, this is a right shoulder, and this a left shoulder. All those are ways of identifying the direction of the market. So the head and shoulder means that there is a reversal. You understand this one? So from there, we're expecting the price to drop from here to go where? Below. In another way, go and watch the video, the previous video on YouTube, you'll find it out. And in another way, there is something like this, that the price, after the break, the price do not come and come to test this, but eventually go all the way to up. But at the end, the price come all the way to test up, then it continue to go down. This we call a structure retest. We call it a structure retest. So this is another kind of structure that we are using it for the reverse of the market, especially in currency. So from there, someone can take a trade to go with the trend. All this we are finding the way to take a trade from the beginning of the trend to the end of the trend. So that's second one. The third one is this one, that when the price moving up like this way, after the price did the break of structure, not always come to test at this point or at this point. Sometimes the price do like this way, that do not go the way to test at this or at this point. They don't come and test this. They create another thing here, then drop below. So if something like that happen, we are expecting the price to come all the way down, then to come all the way test this point. From there, we can continue the trend. Or sometimes the price create a low, lower high, lower low, then at the end, come all the way here to test, then it continues the trend. So this is another thing that we are used to identify the trend. So I was showing on an uptrend, but on a downtrend is vice versa. Vice versa for an uptrend is true on a downtrend. But two things that have revealed in the market during this half of the year, from January to this June, and playing well in the market. I tried to take some screenshots. I will share it on my Instagram. Make sure that you follow the page of Star Trades. I will share that. So another thing that I have revealed in the market, these are two structures. So be careful. Follow me step by step. You will learn and understand something that will be useful on your trading career. So this is number one. The number one is that on the past explanation, I was saying that the price when moving up like this way, after the break of structure, we're expecting the price to return at this point on the past. But on these two scenarios, it's not in that way. It's in this way, that the market, when going up like this way, okay, at the end create a big, a long neck. Before the break of this, the price create a lower low, then a lower high, then at the end we got a break here. Before, on the past scenario, we was expecting the price to test at this point. But on this scenario, it's in different way, that not always the price will come and test at this. Not always the price will come and test at this. On this scenario, the price will come and test this, then it continues to go down. So this is an invalidation point. I don't know how to call this. I'll find the name to name it, but this is the scenario behind behind this structure. Most of the time, the price come all the way to test this, then it go down. But eventually, all these are behind of the supply and demand. All these are behind of supply and demand. As we know that no any business can go on without a demand or a supply. If there is a demand, it means that the supply is needed too. If there is supply, a demand is needed too, so as the business to be conducted. So all these are behind supply and demand. So if you are in good position on supply and demand, I don't think this will be hard to you to understand because it's very easy. I will show you in the chart. This is on an uptrend, but on downtrend, it's look like this, that when price moving down, creating those series, before change the trend, create a long neck like this way. But before breaking this, the price create a higher high, then a higher, a small higher low, then create this high high, then it made a break at this point. As we know that the price always expected it to test at this point, but at this time the price must test at this point. So from there, we are expecting to see a collective nature to this point, then take our trade at this point to go up. So this is how we validate an uptrend in this kind of market structure. So I say that I don't know the name, I don't know how to call it, but that the reality that are facing on the market, especially on on the euro pairs. The euro pairs paying much on this kind of structure, very, very much kind in this structure. So that was the scenario number one. The scenario number two is look the same, but in different way. Very the same, but different way. Let me start with an uptrend as usual. When moving up this way, this way, this way, before the break of structure, at this point, before the break of this, the price cleared the lower low, lower high, lower low, lower high, then eventually the price break. But before the break, as you see that there is a two, lower high, lower low, lower high, lower low. Okay, so as usual, we know that the price will test at an invalidation point, but these two is in different ways that the price can test at this or at this point. But the highly recommended, the higher probability to reverse is the second one, not at the first one. I will show you in the chart. Then I remember last 2 weeks, I take the trade like this. I take the trade like this. So this is the scenario that that behind the trading secret that I revealed this 2021. So from there, we expect the market to come all the way here to test this, then it continue to go down. And at the end, on downside, the same case, the price before break cleared this, then eventually break the last lower high. After the break, we expected the price to test at this, but on this scenario, the price will test at this point and not this one. The highly recommended one is this one. So from there, we're expecting a collective nature to the area, then take our trade to continue to go up. So this will be our decision area to take our long what? Our long trade. As I said that this most happen on euro pairs, most on euro pairs. So let me go to the chart, then it show you. After showing you, I will allow you to ask some questions and stuff like that before we continue. So let me go. Let's make chart visible. Let's make chat visible that way. I started with Euro GBP. Euro GBP. I was indicated some of the examples. Okay, so let me show you some of the examples that I have on this. Follow me clearly on this market structure here. Follow me clear on this market structure. On this market structure, we were having this. Let me try to label it. Was having this area. Let me make it visible somehow this way. Okay. You see this area. On this area, we have this last year. We had this last year higher. The last year higher. I mean the previous high before the last year high. Because our last year high is this one. This one. But before this, last high was having this, the previous high before the last high, which is known as an invalidation point. Okay. Then the last the last lower high was this one. So from this kind of the market structure, let me try to use an illustration here. From this kind of the market structure, we had something like this, the break above. Okay, so from there, this point is this one, this point here is this one, and this point here is this one. So before break of this, we got this to lower low, lower high, lower low, lower high. Before the break of this one, before the break of this point here. Lower low, lower high, lower low, lower high. So we had something like this, lower low, lower high, lower low, lower high. Eventually we got a break at this point. So this break here is like this break here. So this point here and this point here. So this point here, let me use a drawing like this, and this one here is like this point here and this point here. Okay, this point here and this point here. So the highly recommended one for the reverse is this point and not this one. It means that the point that we are expected for the reverse or this one. And on our drawing is this point here. So this is the highly recommended for the reverse. That's why after this break of structure here, I'm sure everyone see that after this break of structure here, the price reversed exactly at this point to continue to go down, and there was a high yield from this trade. I take this trade past 2 weeks. Take the 100 pips, then leave it. I didn't take at the first after the first pullback. I took this at the second pullback, and I was missed also this. Then I became to take it to this point, here. This was my place where I take the trade. But I learned something from this, that there is an opportunity come especially on Europe. I mean on Euro pairs. You can miss the trade, but if you know this, you can get a trade due to that trades. Okay, so that's all about this. And another example, it was on this European. I think it was daily time frame. Is it daily time frame? I'm not sure. I'm not sure if it's daily time frame, but I think so. I don't know. Let me find the exact area. It's not this one. It's not that one. I'm not sure for this. Was it this? No. It was around this area. Yes. It was this one. It was this one. This is an example that the price was moving up, down, then we got this up, then we got this down, then we got this up. Then before the break of this, we got something like this, then a small pull up, then we got this break. After this break, a lot of us expected that the price will reverse at this point, but eventually got a stop hand. But the right price was to take a trade with this one. Look at the tightest stop loss that we were supposed to use it. So this was the area where we expected to take our sell trade. And these scenarios look like this, as I was showing on the illustration, that something like this, then up, then before the break, we got something like this, then we got a break. So from there, we're expecting, most of people are expecting to take a trade here, but at the end, the price come all the way to test at this point. So from there, we see the price coming to test this, then go to down. So it's look the same. It's look the same. So the area that's our trade was supposed to be taken was at that point, and not at the lower. So this was good to us and was having a good risk to a reward ratio. That's all about. Maybe if you have a question, let me allow you. So if you have a question, you can unmute and ask the question. You can unmute to ask the question before we continue. Any questions so far? Still holding this.
Yes, hello. Official himself. Kaka nina swali.
Sawa.
nimekuwa nimekuelewa sana hapo mwishoni hapo pamekanganya, lakini kidogo nimeelewa sababu hizo structure ambazo umenisaidia kuchora nikaelewa. Lakini naomba kuuliza swali kwenye pale ambapo umemalizia mwishoni kabisa. Do we trade hii structure kwenye pullback continuation, kwamba soko likiwa na uptrend ikarudi kule ambako nilianzia, tunatafuta hiyo broken structure kupanda kwenda juu, ama kwenye consolidation market kama ni monthly, tukitafuta hiyo structure tutaipata kwamba imefika kwenye resistance na imefanya vitu kama hivyo, the break structure na inapanda. Do we trade that? Ipi ambayo ni nzuri zaidi kwenye kuitrade, kwamba ni bora iwe inaenda kama ni uptrend tukasubiria ifanye pullback, ama ni bora iwe kwenye consolidation afu tukapata scenario kama hiyo?
By the way, as I said that it's happening only in Euro pairs. Na sio mara nyingi sana kama nilivyosema, na sio mara nyingi sana. I don't remember another pair, nisikumbuki vizuri another pair ilikuwa ni pair gani, but I remember it was most Euro. Is it Euro CAD and Euro GBP? Those, especially those zigzag pair. Those zigzag pair. The hair. Let me try to see. By the way, ni kwamba, sorry for those who don't understand the language, but let me do this in this way. That a consolidation market followed with the stop hand. When we are in consolidation market, after the consolidation market, we followed with the stop hand. I mean the first direction before we go on the right direction. That's the reality when you face the consolidation market. Hapo kwanza umenielewa?
Yeah, hapo nimeelewa.
Kwamba tunapokuwa kwenye consolidation market, most of time after consolidation market, we fall with the fake breakout. It can be up or down. So when we are in consolidation like this, we follow with a fake breakout, then continue with the right direction. And when the fake breakout happen, it means that the place where the fake breakout started is used as an invalidation point sometimes, but sometimes when the market did a fake breakout like this, create something like this before come back all the way to test this. It means that they stop out all these, I mean, all sellers here, then they come to stop out all buyers here. At the end, they take out some people again here who take the sell here as a continuation to go down. Then from there, they will continue to go up. This is the reality of a breakout. And in downtrend, the same case. I mean, on the downside breakout. If they do the breakout like this way, most of time they create something like this before go all the way up, and at the end come all the way to stop out again. Then from there, they will take a trade to the correct side. Especially an Asian session. The Asian session, consider this, then followed with L London breakout. Then New York come to correct it, then it continues the right, the right direction. It can be the beginning of the week or the end of the week. This always happen. But in my side, I don't need to claim you that you have to trade on this kind of market structure only. You have to know the structure that gives you a trade or an entry every time. So tunanipata. Nataka nikupe kitu ambacho kinakupa entry muda wote. Maana yake ni kwamba either iwe kwenye consolidation au sio kwenye consolidation, you will take a trade regarding to the principle. Kwa hiyo, what you have to understand the principle that this happened. What should I do? I make the decision. If I lose the trade, it's fine. If the trade win, it's fine. You understand? Bro, uliouliza swali umenielewa? Ukinipa go ahead inaendelea. Hello? I don't know if it's still here, but
hello.
Umenielewa?
Hello.
Nakusikia?
Hello.
Nakusikia, umenielewa?
I have a question about the time frames.
Oh, okay. I've seen your message here that the time frame to consider. By the way,
yeah.
By the way, you can trade it from any time frame. You can trade any time frame regarded to your trading plan. By the way, you can use monthly, you can use weekly, you can use daily, 3 hour, 2 hour, and hour, up to 15. Some of people using even a 1 minute. Those are we call it scalpers. I use even a 1 minute. Supply and demand, best time frame to use for hour and 1 hour. But the higher time frame like daily, weekly, and monthly, they give you a whole direction of the market. Let me give you an example. This is Euro USD. Sorry. This is an example. Euro USD. For those who are trading supply and demand, on daily, they know up to now that we are creating something like a downtrend. How we created this? Because our first trade was taken from there, but another zone, or this one, a supply and demand trader. That is daily, but when they come on 4 hour, like this way, on 4 hour, they see they have different zones. That's give them a trade. Daily, we know that we have something which is long downside, that from there we are expecting our Euro USD to touch all the way here. So if we come all the way to touch here, we have to find our sell orders so as to continue the trend in 4 hours. So from there, we identify our zones here. This will be our supply zone. We identify another zone here. So from there, we are expecting that the pullback from this point to this point, if given the confirmation, we'll take a trade to go down. If given the confirmation to there, will take us down. But also, they can tell the trade from the buy here. Hence, they have confirmation, but they know that we are going to exit here because our long term is sell and our short term is buy. So you can use both time frame to analyze so as to know that this will be the long term and this will be the short term. Higher time frame confirmation give you the direction for the long term, but the lower time frame give you the direction, give you a confirmation of the long term and the short term, that the long term one will be the confirmation which follow the higher time frame confirmation. But the short term one is the confirmation that give you a trade, but in opposite confirmation with higher time frame. So that's the reality and that's the fact behind. Maybe if you have another question. The confirmation of candlestick is there, brother fella. The confirmation of candlestick is required. For the risk taker, they don't need even a confirmation of candlestick because they have a lot of confirmation that they use on an expert. But for a beginner or not an expert one, they need to have a confirmation before they take before they take a trade. So the confirmation of candlestick are considered. All candlesticks, candlestick pattern, they can be used. It can be used as the confirmation, but most of time on the kind of structure that I've explained, that the candlestick, the confirmation of candlestick used in the candle closure below. Let me show you. The candle closure below that I used that the confirmation, when the candle closes below, what it means that of the candle closes below, as you seen that, let me show you here. The exact area for this one. Okay, this was the exact area. Look at the candle number 1. The candle number 1 got as a breakout. The first candle to touch the area, broken the area, but at the end of the day closed below. So this is one of the confirmation that's bring you a clean confirmation to take a trade, that hence the candle has been closed below. So I can take a trade. I can take a trade after this candle closure below. The next candle came out, then just tap the area to continue the trend. So the candle closure below will give you the place where to locate your stop loss. But an entry will be at this point after this first candle to close below. Okay, but there is no guarantee. Another confirmation that can bring you, give you a trade. For those who trade supply and demand, they understand that this was our clean supply zone. So the candlestick that was giving us the confirmation was this engulfing, and our entry point was 50% of the engulfing candlestick. The 50% in this one, a half of the bear candle. Okay, a half of the bear what? The bear candle. And our stop loss was supposed to be pressed above the what? Above the zone. So that's all. So from there, you take a trade and you be safe. As I said, all these are behind of supply and demand. So the supply and demand, the mother of everything. Mother of everything. Any business, a clothes business, a food business, or an advertised business, depend on the demand and supply. That's all. That's why I advise the people to understand the principle of the demand and supply. That's the mother of everything. Not in Forex in any business, there is this. Maybe if you have another question. Maybe if you have another question. Question so far?
Another question, please.
Go on. You can go on.
Can the supply and demand be used on the synthetic indices?
Yeah.
Like a crash and a boom.
Exactly. You need to have a confirmation.
Yeah.
I
have another question about the, can I use a drawing on your chart?
You need to use a drawing. Okay. Let me allow you to use. So you can draw. Oh,
yeah.
Okay. Yeah.
Sorry. My question is, how can I draw? Can I confirm that the supply zone is strong?
This is an ICT confirm. I mean ICT concept. If I'm mistaken.
No. I based on the
smart money concept or Wyckoff?
I based on the ASEAN session.
Oh, okay.
The consolidation one.
Okay, this we call it a Wyckoff, a smart money concept, or an ICT. Those who are familiar with this understand. By the way, your question is, how can I know that there is a demand or a supply zone? If I'm mistaken, Yes,
that's the question.
Am I correct?
Yes, you are correct.
Am I correct? Okay. So to draw a demand or a supply zone, to know that this is the supply zone, we have a principle to understand. First of all, you have to understand that the candles, if it's a penny bar, if it's an inside bar, if it's an engulfing, every candles, you have to understand this. That's one. Number two, you have to identify where, this candle is pressed, it's on the beginning of the big move. That before the big move, is this candle there? Is there any engulfing, or is there any inside bar? Let me use, for example, GBP Audi 15 minutes. These are 15 minutes. This one here. This is a collective nature. Then we got a small breakout. Okay. How do we know that this is a demand zone or this is a supply zone? As we said, first of all, we have to understand the what? The candles. But the second one, to identify a demand or a supply zone, you need to have a big move. You need to have a big move. So the demand or supply zone is on the beginning of the big move or an end of the big move. And on this beginning of the big move, we have those candles that used it to confirm that this is the demand or this is a supply. A pin bar, an inside bar, and stuff like that. Okay. So, example in this area here, after this breakout, we had a clear, this a hammer or a pin bar. Am I right? This was the candle before this big move down here. This one. So if this was the candle before the big move, the big move down here, it means that this was our supply zone. So this is how we used to draw a demand zone. A supply zone. If it was on an uptrend, on an uptrend, like where? Sorry, let me find a chart with an uptrend for now. GBP CHF, here, when the price was moving up. Let me take this as an example here, that all this for the correction, but after this big move up, this one here, the candle before big move, this is like an engulfing because this was engulfed by this. And how we draw this, we put it at the close, then at the wick of this candle. So this is how we use to identify our demand zone. So through that concept, you can you can identify that this is the demand or this is the supply zone. And after getting the confirmation, after the price return on the demand or supply zone, you can take a You can take a trade. GBP JPY, our learning trade, GBP JPY, which was shared yesterday. On what? On my Insta story. This is our learning trade. How do we identify this? There is a lot of confirmation that bring me this sell. Number one was this Falcon said touch, was having the first one here. Okay, this was the first one here. This was the second one. Then this was the third touch of Falcon. This was the confirmation number one. Okay. This was the confirmation number one. Not just taking this trade. Okay. The confirmation number two, before this big move down, was having this. This was our supply zone. Eventually it was broken, but still on daily time frame, there was the big supply zone. This one. That's why our answer was pressed above that one. Hence, this was the second confirmation. So this candle before the big move gives us the confirmation to say that this is a demand. This is the supply, and after the return on the zone gives us the confirmation for taking the sell. But at the current market price gives us another confirmation. Let me move this drawing. At the current market price gives us another confirmation at the same area, at this area, that the price after being reached at this our clean is a supply zone. The price created something like this that I was explaining on the first session. After the break, the price tested this. That we are in the supply zone, and it brings us a nice break of structure, which means the change of the trend from up to down. Then that's why we take a sell trade with high confirmation. This was an invalidation point, hence we got this candle closure below. That was the confirmation for us to take a trade, and our SL was pressed above the 4-hour supply zone. So that's how we use to identify those supply zone and demand zone. Up to now, almost more than 100 pips from this trade. More than 100 pips. We had also GBP USD, which is trying to move down. The same case, was having the nice supply zone here on the 4-hour. We got our confirmation from 4-hour, but we went on 1-hour so as to minimize risk. So on on 1-hour, our demand zone was from this point. Then after reaching this area, created a nice continuation like this one. A reversal after this break of structure here. Hence this candle closed below. This was an invalidation point, and it was the place where we take our trade to go down. Also up to now, we have almost 80 pips on this trade. Almost 80 pips up to now. So that's a confirmation used to take those trades. Okay. I've taken another trade on VIX here. I can share the screenshot on my group because this trade I have here in my phone. 0.05, take these 3 trades from there. It's running good too, improved. Hence, I use this branded demand. Smart money concept too, also used it there. Those who are in my channel will see it. That's one on VIX. the confirmation of saying that this is a surprise zone, or this is it inside Doge, a Doge candle. This, we draw it like this way, that we cover from the week to week. So this was the confirmation of me to take the sell trade from there. And my first target will be on this word, on this demand zone. So that's all. Hence the higher time frame, we are in demand zone too, especially on daily. We are in demand zone too, daily. This is daily. Here is our demand zone that we have on daily. So anything can happen from here. The same case at this point, the confirmation of the demand zone. That's why I say that demand zone, I mean a supply zone, demand and supply, the mother of everything. So that's all. Another question. Another question.
My last question is, you offer mentorship, right?
Exactly.
In your mentorship, you only focus on supply and demand, or you mix with other method like Falcon and other?
Most of people, they have learned smart on Falcon because the one is very popular. And its methodology, it's easy, like to draw a mini channel, need just a two touch, like this way. This known as a channel, but sometimes no, sorry, but sometimes to draw, I mean to know that this trend is going up, we are just using a big move, followed with a continuation. Then from the continuation, we're expecting a big move. So we'll learn each and everything, because sometimes the market cannot give you a clean supply and demand to understand the direction of the market. But an invalidation point and stuff like that give you an opportunity to take a trade. You understand? A trend, a Falcon give you an opportunity to take a trade too. Let me give you an example. A Euro CHF. When you look on Euro CHF, you cannot find out an opportunity to take a trade if you are using supply and demand. It's not easy to identify where is the supply zone, where is the demand zone, because it's very zigzag. But a Falcon trader can tell you that we have this, we have this, but also we had this. You see? So from there, this is an ascending channel, and from this we had something like this. We had something like this. And I think at this point here. Hence we had this break, and we had this nice continuation. We had this nice continuation. So after this break, we are able to take a sell trade here, and replace our SL above this. Very clean and explainable. But also you can have something like this, that we can got something like this. That's go the way down, that like the second touch, then we can get a third touch here, then you continue to go down. This is a falcon. But an invalidation point also, you can find an opportunity, but you cannot get an opportunity on this kind of market on this kind of market structure. Hence, you have to wait for the price to break this, the rusty lower high, this one. Then from there, you have to expect the market to come all the way to test this invalidation point here, and an invalidation point here. And from an invalidation point, we had the point that I was talking about at this point. So you have to wait up to the price to turn at this point. But the market, when moving down before come all the way here, give you an opportunity to take a sell trade. Then from there, you come out and get something like this happens. Happened there, something like that the market come all the way here. Sorry. Came down. You found out that the market came down all the way here, then after touching here, all the way here, then a said touch here. Then from there, you found out the market will come all the way there. So all this time, you will be out of the marketing waiting, but the Falcon trader get a what? A trade. That's why we learn a multiple strategy. But all these are technical. All these are technical. All those names are just names and stuff like that. Hence, that's a business of the people trying to create something that they can make money. But all in all, is technical and based on technical analysis. That's all. So we learn difference strategy, we learn smart money concept for those who want it. But it's not easy to learn smart money concept because it's one of the hardest strategy to learn. But if you master it, very, very interesting. Very, very interesting, especially on those breakout and retest. Chopping market, then after chopping market, a breakout, then a retest, then take a trade. That's all. Oh, sorry.